Hey, I'm Cliff. Welcome to the Coulter Law Podcast. Welcome to Washington Law. This podcast is separate from my role as an attorney. However, it is my job to educate, teach, and put certain things into context. And as always, it helps tremendously if you like this video and subscribe to my channel. S corporations are not a business entity per se. However, they are a tax election. So where you might have no real tax savings with an LLC, you have the benefit of pass-through taxation, which I will talk about here in a minute. You won't have significant tax savings like you would in an S corporation. LLCs and S corporation both have the benefit of limited liability. And what that means is the owner's personal assets cannot be used if somebody is trying to pursue a claim against the company. LLCs are also preferable over sole proprietorships and over partnerships because they have pass-through taxation. And what that means is that the owners are going to be taxed on the personal level, on their personal income tax returns. However, the company is not going to be taxed like in a corporation, where there would be double taxation on the corporate level and on the individual level. LLCs are also quicker to set up, and they have fewer legal requirements, and last but not least, fewer corporate formalities, certainly over S corporations. S corporations, you'll need to have a company that does your bookkeeping, that puts together your W-2s, very likely, unless you plan on doing that yourself. And a good company that you could use is Gusto. That's the company that I would recommend. And if you would like to, you can click on a link in the description and you can get started with Gusto. S Corps might also have the benefit of being easier to transfer your business interests because S corporations have a independent lifespan that is not tied to the owner's life or the owner's involvement. And the main reason why y'all probably watching this video is that S corporations are required to pay a reasonable salary, and so that will reduce the profits of the company, and any profits that are left, the S corporation owners do not have to pay self-employment tax on the rest of the profits. So that is a big benefit. There's a lot of things out there that are saying that it could mean as much as a 14%, approximately 14% tax savings for those companies. Speak with your accountant, see if S corporation makes sense for you, and if it does, you could be seeing a significant tax savings in your near future. So thanks for joining me today in my discussion about S corporations and LLCs. If you're enjoying this podcast, please subscribe to my channel. You can also subscribe on Spotify. And as always, thank you for your interest in your rights and the law. Thanks.